Hello and good afternoon. We are here with all the important topics right before the US stock market rings the bell. Apollo Global Management has expressed interest in making a substantial investment of up to $5 billion in Intel, according to a report by Bloomberg. Intel, once the most valuable chipmaker globally, has seen its stock plummet nearly 60% since the start of the year due to ongoing challenges in the semiconductor market. Apollo's proposed investment is described as equity-like and is still in its early stages, with no guarantee the deal will be finalized. This follows a recent $11 billion investment by Apollo for a 49% equity stake in Intel's new manufacturing facility in Ireland. Simultaneously, Qualcomm has reportedly shown interest in acquiring Intel, signaling heightened pressure on the struggling chipmaker. Qualcomm's CEO Cristiano Amon is personally involved in these preliminary discussions, although the talks face significant hurdles. Both Intel and Apollo declined to comment on these developments. The unfolding situation reflects Intel's vulnerability amid growing competition in the semiconductor industry and a shifting market landscape. General Motors is set to lay off 1,695 workers at its Fairfax assembly plant in Kansas in response to a planned production halt of the Cadillac XT4 in January 2025. The first round of layoffs will begin on November 18th, affecting 686 full-time workers and 250 temporary employees. A second phase, set for January 2024, will temporarily lay off an additional 759 full-time employees. These measures are linked to GM's decision to pause production of the XT4 until late 2025, when both the Bolt EV and XT4 will resume manufacturing on the same assembly line. The production pause is part of a larger restructuring effort that includes a $390 million investment in the Fairfax plant to upgrade its facilities for EV production. GM has also implemented broader job cuts across its global operations, including over 1,000 salaried employees in its software and services divisions earlier this year. The layoffs in Kansas reflect a continued shift towards electric vehicle manufacturing, as GM pivots its strategy to meet the growing demand for EVs in the automotive industry. Shares of Coinbase surged by almost 7% after the Federal Reserve announced a significant half percentage point cut in benchmark interest rates, exceeding market expectations. Coinbase's stock peaked at $174 midday Thursday before closing at $168, marking a remarkable recovery from last September when the stock dropped as low as $76. This rise reflects broader positive sentiment in the cryptocurrency market, which has also benefited from rising Bitcoin prices, now up 10% and reaching $64,000 at one point. Coinbase's improved performance is largely driven by a surge in transaction revenue, which reached $1.2 million in the first quarter of 2024, almost equaling its total revenue for all of 2023. Increased trading volumes on the platform indicate a resurgence in user activity, further buoying the company's outlook. Coinbase, whose revenue relies heavily on trading fees, continues to serve as a barometer for the overall health of the crypto market. Additionally, MicroStrategy, a company with substantial Bitcoin holdings, also saw its stock rise by 8% this week. The Fed's aggressive rate cuts have boosted investor appetite for riskier assets, including cryptocurrencies, contributing to the recent gains across the sector. Despite the rally, it remains uncertain whether Coinbase can maintain this momentum amid ongoing volatility in the market. This is all we have for you this week. We are MEXEM TV, and we will be here next week, same place, same time. Goodbye.